Hey, hey, welcome to Travillian Next. I'm your host, Amber Buker, Chief Research Officer at Travillian, and today I am in my wheelhouse. That's right, we are talking about banking as a service with a rare talent in the industry, someone who's actually built BaaS and done it more than once. My guest today is Patrick Slane, VP, Director of Fintech, and Interim CISO for Stearns Bank, a roughly $3.3 billion asset institution based in Minnesota. Patrick gave us tactical, actionable insights, getting specific on how long it really takes to build the business, how to keep it simple and aligned with your bank's strategy, and how to pick the best partners. That last one is one of the key differentiators for banks that break out in BaaS. So let's get started. All right. Thank you so much for joining me, Patrick. How are you doing today?
Doing well. Doing well. How about yourself?
I am doing wonderfully. It's a beautiful day in Tulsa, Oklahoma. I can't complain. And I get to talk about my favorite topic with you today, which is banking as a service. So this is going to be great. Before we jump into that, though, I want to hear a little bit about your background because it is pretty unique, Patrick, in the sense that you have done something that very few people in our industry have done. You have built banking as a service for not one, but two institutions now. And it's pretty rare because it's not that old of a space and sector. And so finding people that have experience in it, we know from our own work at Travillian is kind of tough sometimes. It's a small world. There's not that many banks in the space to begin with. So this is a pretty unique background that you have. And I just love to hear a little bit about how you got into this side of banking.
Yeah. Well, definitely appreciate you having me on. I would say that it was happenstance that brought me into this space, to be honest. So a lot of it was, I had relationships at a prior bank that they were looking to do something new in banking. And basically the directive I was given was find the white space, take a greenfield approach. What are other banks not really doing? What is the real opportunity out there? And that was in about 2021. And so I went to that bank. The title I had at the time was Fintech Strategy and Solutions, which was super vague because they weren't exactly sure what we would end up doing with it. And they wanted to make sure it was fully encapsulating. We ended up running down a few different ideas and came to the conclusion, presented to our executive team at that bank, said, we think that, banking as a service and embedded finance is really where the white space is. Obviously in 2021, had we known what the next 3 years would bring, would that be the same answer? Maybe, maybe not. But, that's the ultimate direction we ended up taking. And, the executive team said, okay, great, like have at it, build a strategy, figure out how we're going to do this. So, over the next about 4 years there, I helped to build and solidify the fintech business at that institution when I ended up getting a call from Stearns saying, hey, we are in this space, but we're looking to kind of re-architect the business. We want to mature it and basically bring it to the next phase, which has kind of brought me to where I am. And, when I did join Stearns, they did have a fintech division. It was relatively nascent. It had some deposits and some fee income, but they were really looking to realign the business to the risk posture of the bank. So that's really a lot of the work that I've been doing is, driving the realignment, the restructuring of the programs that we do have and, onboarding new ones that are aligned with the strategic objectives of the organization.
Curious, what that first role you said there was a lot of white space. It was just like, here's fintech. What should we do? Was that kind of the mandate, was figuring it out? And then did you kind of hone in on BaaS for a particular reason? I think a lot of people, that the first thing that comes to mind is obviously deposit generation being the biggest opportunity in fintech. Were they already leaning that way, or was it truly a white space where it was like, yeah, just go figure this fintech thing out, and you honed in on BaaS?
Yeah. So at the time we were heavily focused on deposit generation. We were a net buyer of brokered deposits at the time. But ultimately, I think what we viewed the line of business as was flexibility. And there's one thing I remember back to, because in the presentation we put together for our executive team and the board, there was this like lever diagram that you could pull the levers of the banking as a service business, whether you're doing deposit generation, payments, or lending, and say, maybe we want to keep more on balance sheet, maybe we want to push more off balance sheet, whether it's deposits or lending. And I think the flexibility that this line of business can create for banks could be pretty transformational. That bank right now is running at an excess of deposits. So, that's what that created in a, 3 to 4 year period. I think the things that people miss about it is just the amount of time that it takes to actually get it off the ground and build it. It's not an overnight success story. It's not, we're going to do this and get in and get deposits like in 3 months. It's, you're building it for, if you have someone that's done it before, 6 to 12 months. If you're trying to do it yourself, 12 to 24 months. And then you're onboarding partners, preferably at a slow-ish pace, to make sure that you're getting all of your oversight obligations and compliance and all of that correct before you really scale it. So a lot of businesses, and when I went into that, I said it was going to be a 6 to 7 year process for the business to mature, right? Because you have your first set of contracts that are generally 3 year contracts. You realize what programs are good, which ones aren't. You optimize your pricing models and how you want to build the business. And then by year 6, you're really just optimizing that business. So, I mean, it is a longer term play to do it really well and do it right. But I mean, if you look back to when I said it was going to be 6 to 7 years, I think that it's roughly right.
Love that specificity and timeline. That is so useful for our audience, Patrick, because I know there's a lot of banks out there that are contemplating getting into something like this, whether it's banking as a service or lending as a service or payments, even just having a robust group of ISOs, these embedded, right? These are all aspects that can be helpful and accretive to a bank. So appreciate that specificity. I want to get into Stearns and your work there now. So, what was it like to come into a different situation where there was already a base and you have the opportunity to kind of think anew about what's already there? How was that different for from the experience you had prior and the team? What was the culture like that made you want to try something new?
Yeah, so I mean, it's very much been a great experience working for the team here. I have great leadership that understands the business and supports the work that we're doing. I run a very simple business. It's not overly complicated. It's well within the confines of risk tolerance for most institutions. It's picking the things that work, business deposits, business payments, business cards, to some degrees consumer deposits and consumer lending and consumer payments and whatnot. But like finding programs that are mid-market, that are have experience. I stick to my lane for the most part and I execute at it extremely well. And it's just done very well for me over time. There's more than enough opportunity in this space for banks to work together, which is very helpful. But, I would say that, we have values here at Stearns Bank that are corporation values, and the ones that really help me in and drive the culture for not just me but also my team and the organization is, a few of them that come to mind are, the tenacious pursuit of excellence, right? That operating excellence is a core part of how I run the business. We're all employee owners at Stearns Bank, so we have an employee stock ownership program. So all of us get contributions of company stock every year, which is, a great benefit to have. It creates shared values and a shared ownership mentality. We focus on trailblazing creativity, and also sense of urgency is like incredibly important in this business. So like looking at Stearns values, that's just a few of them, but like looking at where Stearns values align, it very much aligns to how you need to run the fintech business, because you are constantly operating with entrepreneurs. You're operating with people that need things done yesterday. Your operational excellence, like the bank cannot be a risk to your fintech programs. So all those things just very much align to how I run the business, and it's made it a very easy transition for the most part.
I love what you said about there's more than enough space and opportunity for other banks to join in here and work together. I was just interviewing a bank for a special project that Travillian's going to be releasing later this summer that has to do with compensation for innovative partner banks. And one of the banks I was interviewing has a very intentional strategy to be the number two bank for a fintech partner. So they don't want to be the main bank, they want to be the backup bank. So that's just one example of, different pathways and personalities, if you will, that appear in this space. And you mentioned that you're focused on business deposits. That was the first thing you said, business deposits, business payments. Talk about that a little, because I think when most people think of BaaS, they just go straight to consumer and they're thinking that's hot deposits and CDs that are going to move quickly. But you're building it different.
Yeah, I think that there's, the going along the lines of the operational excellence, it's a lot easier for me to run an efficient business with, consumer regulation is extremely challenging and extremely complex and very, it adds time, energy, and complexity to things that, if I can just get business programs and business payments, there's a lot more efficiencies that we could gain there. Also focusing on a lot of the same things. Like if I can get 10 business deposit account programs or 10 business payments programs that all do similar functions where the bank is basically doing the same thing in every program, that creates a lot of efficiencies that we can then ideally pass on to the fintech programs that we ultimately run because we get really good at certain things. We know what to look for in those types of programs. We stick to our lane. We're primarily domestic focused. So, domestic business deposit account customers and domestic payments and domestic card issuance and all of that. So, I mean, there's the regulatory complexity is slightly reduced on the business side versus the consumer side, as well as that's what we do as a bank as well. I'm a big believer, and I tell this to people at the bank all the time. What we're doing in banking as a service is not rocket science. We are ideally doing the exact same thing that the bank does, just through different distribution channels. So the bank offers business deposit accounts. Guess what? We do the same thing in our fintech division. We offer payments to business customers. Guess what? We do that in fintech as well. We shouldn't be creating entirely different operational structures or BSA programs or whatnot specific to fintech if it's not within our existing core competency. So, like I said, I tend to think that I run a pretty simple business and just try to execute really well at it.
Glad you came back to that because I was going to ask, okay, you said it was simple earlier, and I'm sure most people are listening going, yeah, a program that takes potentially millions to build and 6 years to get stood up, that doesn't sound simple. But when you break it down the way that you just did, in the sense of we're not doing anything the way that you're building it, at least, you're not doing anything that is not already a core competency of the bank. And you get a lot of efficiencies when you know your lane and know your individual customer profile and know what kind of bank you're trying to be in this space.
Mhm. Yeah, it's a lot. The biggest problem most banks have is like they don't know what they want to be when they grow up in this space. Like they don't know what they want to offer embedded finance and banking as a service products, but and then they build it and they say, okay, well now we need deposits. So they look at anything that comes in, and you just need to have a level of discipline in the business to say like, yes, we are going to look at these things, or no, we're not going to look at these things. And there's certain opportunities for flexibility. Don't get me wrong. I'll look at programs that are outside of like the standard box that I've set, but they have to be really compelling, right? They have to be unique use cases. They have to be something where we think that company has a real competitive advantage in their space, or they're building something that no one else really is. So those are nuances, but the core of the business has to be built in a way that is durable and sustainable. The same way you build any other business in banking, like an equipment finance division or an SBA division, like all those need to be durable and long lasting. Same thing with the fintech business.
You mentioned how things are structured, and so I do want to go into that because I think that's something that a lot of banks are pondering right now. The models that I see shake out are kind of it's either a shared services model where it's typically in a more nascent space where you're trying to dip your toe and see if you want to do this. And you kind of slowly bring more and more roles over to focus on like the fintech side of the house. Another approach is to build a standalone division. Oftentimes they have an X at the end of them and have it be its own brand and kind of its own thing that has as much of its own dedicated staff as possible right from the get-go. What did you do with Stearns, and how do you see those models shaking out, benefits, pros and cons to each?
Yeah. So when I first started at Stearns, operations and relationship management, business development, all that rolled up to the same person. So one of the early moves that I ended up making was splitting off operations from the relationship management and business development segment. The compliance when I started was separate. So BSA, compliance, risk. We have dedicated resources for that, but I think what I would say is we operate now in a fully shared service model, and it creates better business continuity, especially if you're running a lean organization like I do. But also, I think there's real value that can be garnered in core bank activities from the fintech division. Case in point, if you have a BSA person that reports only up to fintech and they see things in the fintech division that might be useful to the rest of the bank. If it reports up to fintech and they don't have that regular touch point with the rest of the BSA team, like that, those insights won't be transferred to the rest of the bank to say, like, there's these fraud rings, there's this BSA thing that we're running into in this area of the country. And most community banks, I would say, are very much in a position of they're used to engaging in the local community. They have branches in many instances. Most of are not digital first organizations. So, if you're not already operating in all 50 states, like the scale that it takes and the visibility you need to things that are going on in other areas of the country, even in other pockets of the country, are just the transferable knowledge there is extremely valuable. And vice versa. We may see things as a bank that we can, through our core bank customers, that we may be able to share high level with our fintech saying, hey, we're seeing this going on, like keep an eye on this type of activity. So I think that transferable knowledge is incredibly valuable, at least from what I've seen to date. So yeah, I mean, I also am the kind of person I like to engage with the rest of the bank myself. I don't like to live in a silo. I know that tends to happen once you move into this space, like fintech kind of becomes its own thing. But I think that, there's certainly, if you're intentional about it, one, there's a value in just making sure that the organization knows exactly what you're doing in fintech as well. Cause, you may get customer service calls. On the back of the card, it does say your name if you're issuing it. And in the disclosures, it does say your bank name if you're offering deposit and payments products. So, having that visibility and awareness is important beyond just the shared service functions.
You mentioned earlier that you don't take everyone that walks in the door. You have a very specific profile that you're looking for. A lot of banks that are getting into the space are getting flooded with inbound interest from fintechs needing a bank partner. So, can you help our audience understand what you look for in a good program? Maybe that's applicable whether it's business or consumer, just general things that you're looking for to understand a program's maturity. And then the opposite of that, too. Any red flags?
Yeah, I think for me, I like to see, a program that's been established already, maybe working with another bank looking to make a switch that has activity, has a history that we could look at and garner our own insights from. They understand and have a compliance officer, having an understanding of compliance is pretty critical in this space. And you'd be surprised how many earlier stage companies we'll just say like, well, we're going to contract that out and, we'll worry about hiring a compliance person later. I think there's real value even in having a fractional compliance person on staff that ensures that you're doing everything the way you should be. Nothing against the compliance groups of the world. I've had great experiences with them, but you need someone that's truly embedded in your organization to understand the ins and outs, the day-to-day activities and all that when you're building a highly regulated space. So yeah, I think that that's mostly what I look for. I'll look at earlier stage companies if they have founders that have had successful exits, have built in this space before, really have something that I've never seen that I think is highly compelling. So those are like most of the things I would say I look for. What I what the red flags are is people that have no understanding or context around what matters in banking or what matters to the bank. I'm all for building solutions that are for customers and trying to be hyper customer focused. But when you're building in a highly regulated space, you also need to be cognizant that there are rules and regulations of how things are done. So that's usually a big red flag. Other ones can be, you know, funding, oh, well, we need to have a bank partner in order to get funding. Well, we need you to have funding in order to operate a program. So,
Right.
I mean, it becomes a chicken and egg situation, right? But I mean, if the offering was truly compelling, investors would invest in it before it has a bank. Like there's plenty of companies that happens for. So I think that's, something to also take into consideration.
That's really helpful because one of the things that I've seen is that looking at fintech financials is not something that a lot of banks are used to. The venture backed world is just a little bit wild and unfamiliar. And also, we've seen a really precipitous rise in the requirements and standards for a program, the ones that you just mentioned, particularly having compliance actually on your staff and funding. I remember, when we had that sort of wave of consent orders in 22 to 24, a lot of banks really raised their capital requirements for programs and were wanting to see 18 months of runway in the bank before they would even talk to you. So things have definitely matured, I think, from the beginning of your time building in this space to now in ways that are protective, I think, for the banks. What does Stern want to be known for as a partner out there in the fintech world? What's your value prop, I guess, to any fintechs that are listening?
Yeah, we want to be the bank of choice for, mid-market fintechs that are looking for a bank that operates really well, that you don't have to worry about the bank on the back end to deliver your products and services to your customer. I'm a big believer that, the reputation of the bank in this space is driven in the fintech industry, not at the end consumer level. Most customers aren't most likely looking at the disclosures as much as they should be to say, oh, well, this is the bank that's supporting these activities. So, really, you need to have a reputation within the tech industry to say, yes, like we say we're going to do something and we follow through on it. We say we're going to do something and we execute really well at it. We're thoughtful partners to be able to, craft new and interesting solutions with. Those are all things that we want to be known for in the space.
How do you get word out about that? Are you just like going to a ton of events, like participating in certain groups? Any tips on how to get that message out if you are in this space?
Yeah, I mean, I engage with a lot of people in the industry that are I view as thought leaders, as people that are highly knowledgeable, highly skilled in their own areas. We only have so much capacity to take on new opportunities anyway. I mean, I'm not going to onboard 100 deals a year, probably not even going to onboard like 10 to 15 deals a year, right? Unless something, materially changes. And with that, we need to make sure that we're taking in just the things that we think we can actually do. So, we take deals from certain sources. We have publicly announced partnerships with Synctera and Lithic in this space that, they'll send business our way and we'll assess, and, we have certain criteria that we look for even in those deals. But yeah, I mean, we're absolutely open for business. It's just to your point, there's banks that get into this space and they get like inundated with opportunities. I probably take more intro calls than I should, mainly because I'm just interested in the space and I want to see what people are building. But more so than not, it's we know very early on if we're gonna say no to a deal. I'm much more happy to take a call, 30-minute call, to hear someone out and tell them no on the call than to try and go through, back and forth emails and all this, that, and the other.
Yeah. Okay, so when it comes to bringing on new programs, be the sort of Gryffindor, only take in that which makes you stronger.
Yeah, I mean, it's gotta be mutually beneficial. It's gotta be accretive to the bank. We are banks. Like we need to be able to make money. So, but if there's shared values, shared alignment as well, that's just, pretty much slam dunk for us to make sure that we're onboarding the things that make the most sense.
Okay. So you see a lot out there. You're talking to all these fintechs, taking calls, watching the space. Things are so crazy right now. We've got more legislation in Congress than we've seen in a long time. Things are moving really fast on, deregulation and crypto and oh my goodness, stable coins and tokenized deposits. Don't even get me started. What's your hot take for folks whose heads are spinning right now?
Well, this probably will be a bit of a hot take, but I'm a big believer that banks saw tokenized deposits coming and they said, we need to solve this problem in our own way. So we're going to create tokenized deposits from the stablecoin mess and have it do basically the same thing. In a lot of instances, banks are really good at creating solutions for their own problems and selling it to customers as what's best for them. And I think that it's really important for banks to take a step back and say, what are we actually trying to solve for? Like, what do our customers want? Do our customers care whether it's called a stable coin or a tokenized deposit? Do they care if it's called FedNow, ACH, Wire, RTP? Like, no. The only reason they know those terms is because bankers have kind of forced those terms on them. What they wanted to know is my money going to get there when I need it to? Is this the best, most affordable way to get it there in the most timely manner? Am I at risk? Like, is my money at risk in the transfer? Those are the real solutions that we're solving for or should be solving for rather than, how can I make this look the best it can on my balance sheet? Because that's a bank problem, not a customer problem.
Awesome. Patrick, this has been really enlightening. I appreciate your time and thank you so much for sharing your perspective with our audience at Travillian Next.
Absolutely. Thanks for having me.